Welcome, everybody, to my webinar. Welcome to our webinar, WoW Trades. This is me, Alberto Alvarado. Let's begin. For our first timers in my webinar style, for the others that already know what I'm just about to do, is because I still hold the importance that we know a bit of the background of the people that are in front of us, always try to do something, his or her opinion about the financial markets. It's important to know the background. Quick again, my name is Alberto Alvarado. This is myself in the picture. I have more than 10 years, actually 11 years trading the markets. From Mexico, I am Mexican. I have traded from here all the time. I started trading in 2005, and for first account, just the beginning. It was a painful experience, but after that experience, I realized that the financial markets was something that I made my life for. So I decided to take my self-education seriously, because I'm too many tools to learn ourselves using internet to learn this craft of hitting the markets. Nowadays is way more. It's way easier. You have continuous webinars like binary.com, and you have tons of resources in the internet that 10 years ago we didn't have them. In 2007, I started grasping the first results of my efforts. Just to say again, my accounts evaded in the financial crisis of 2008. At a high personal cost, I decided to continue my trading career. But the lessons that I received after 2008 was that my edge, that I thought it was completed well at 2008 crisis, I realized it wasn't. So I decided to give it a shot to include what my intuition told me to do. That was including intuitional, creative, and imaginary elements to my edge. I'm working very well in tandem with the traditional tools like the technical analysis, like the fundamental analysis. In technical analysis, I use front by it, and I'm not customizing and optimizing an indicator every time. Traditional things like Bollinger Bands, stochastics, RSI, MACD, and when available, the volume indicator. And I use the standardized that is the way the charts with those parameters. I use them. At times, some chartist packages uses different parameters. Well, I'm not even interested in looking at them. Just to when you different time frames, you get analyzed. Because the thing is that if you want to watch a chart with some parameter, the next one in the next time frame should hold the same parameters, so you can have the accurate information. In the fundamental analysis, well, I don't have any kind of super degree in economics or mathematics. I'm just a normal person. The thing that I do is that I try to be of the fundamental releases of let's I still always hold my opinions on every fundamental news release. I, of course, read a lot, so that I do for being informed in the fundamental side. Well, all plus that, my personal edge, that is super subjective, ended up working very well for me. So what you're going to see here is the result of all that. So you have your own ideas and to have your own, maybe right information, so you can then have high quality one and then take your own decisions in the markets. For those who subscribe to my social media, I will remind you that my YouTube channel is this one. In YouTube, in the search box, you type IIBB's Trading Room channel. It's not important that you do it now. You will receive an email with the recording of this webinar, so there you can only check it, type it, and look for it in YouTube. That shows up. You click subscribe, and for others that would like to have me in the groups here is my how you can look for it is IBB screening room. So it is. So we're going to do today, we're going to review the trades we have open in yen since almost 1 month. They targeted to expire on Friday. They are targeted to expire on Friday, and have turned to be. We have a very bad in dollar yen, but we're going to review what we can learn of that, and a very important aspect on money management that this opportunity is giving me to explain you why money management is way more than traditionally it is said. Okay, at the bottom is that money management is not only risking 1% of your account or whatever, 0.5%, whatever. No, that is not money management. That is simply a rule. But this is a complete different thing, and we're going to check it out. Okay, let's continue. Well, you can see the portfolio dollar yen trade is open. Okay, you can see for the ones that have been aware for the latest webinars, I'm going to show up the charts to make this visual. But to give you an insight, we open a lot of trades. Well, a lot of trades. I think the dollar yen should go up. Did, but after FOMC's statement, the market started going down. Of these trades because of two reasons. Because I still hold a fundamental bullish bias on dollar yen, is because in order to close this, either in winning or losing final outcome, important I explain to you, because this is the idea of opening all this in front of you, that we earn. Because it doesn't make any sense that I close a trade in beforehand in losses or in winnings, and I'm not sharing anything. Okay, very important. As you can see, the first trades that we open for this one's dollar yen higher than 114.60. The dollar yen now is more or less below 111, if I'm not wrong. About just to expire end of this month at 0. So we have several trades that way. Over here, I open according to the circumstances at that time. I pay out the yen if it's outside 112.15 or 100. 114. It's about to hear incentive things are more or less the same in profit. And then with this again, dollar yen ends strictly between 112 and 115. Well, apparently this is going to end in a loss. But the more the market started going down, and after due diligence reach and being myself, within myself, I was still holding a bullish bias on dollar yen. As you can see, I kept opening some like this one, payout dollar yen strictly higher than 111. Okay, so this could be close in profit, depends on the next price action these next days. There is one that is just about to be close in a loss. We have stricter than 111, the same case as this one. But it became a time when it was clear that this correction was overextending the attitude I was looking for. Closing all the other trades that didn't make sense at that time for me, because I'm still holding a bullish fundamental view. Let's just start opening some trades. Got a trade. Win is strictly higher than 109.50. I'm going to show you in the charts this way more clearer. But just be reminded, I opened several trades here at 109.50, 109.50. Payout if the dollar yen strictly higher, 109.50. I selected that price and the fundamental level, at least so far, that could indicate that maybe dollar yen could actually enter into a quick correct move to the downside. As long as it the vertical 110 held and this 950 is not touched. Expectation is that this could actually have even a surprising movement to the upside. That is why I haven't closed any of other trades, but started opening several trades with this characteristics. As you can see, most of the latest trades, it's three ones. These ones are most likely be closed in profit, but it depends on, of course, a lot of aspects. The money aspect is this one. Check all the potential payouts. 10, 10, 10, 10. Okay? 10, 10, 10, 10. Think about in some minutes about money management. But just realize that, okay? All these trades, all name payout. I'm making an evaluation of that, and that has a reason. 2 is 1. And trade. A Dorian chart. The market here. So since here, after this huge movement to the upside, I started opening bullish trades. Okay, here I open some ones, here I open more. Here started moving down. This is a post FOMC movement. That itself, it was not meaningful. The only meaningful here was magnitude. As you see, well, it just started moving below the simple moving average 14 period here. But what it do afterwards, it looks super into context, and you can review the previous webinars about this kind of trades. These trades were opened due to fundamental reasons. These trades were not opened due to technical temporal reasons. Okay. And is getting the attractive fundamental traders to buy. When it started region, you can see this huge week here, and this overall, and this is a bullish candle. Look at this one. So a lot of interest to buy zones. As you can see, the 110 hasn't been tested. That the latest trades, I believe that I opened several trades there. That one touched the 109.50 was not random. It's not a trade. When we start our trade careers and we don't want to close a losing trade, you are opening trade with more and more volume, the lower it is getting, but without really knowing what we're doing. In this case, when you have a fundamental direction, like the that left me to open trades in $yen, they don't change that fast. When you have fundamental reasons, they should stay for months. So here they could become in your favor. Of course, here the timing was targeted to 1 month. I could have opened, for example, latest trades to be targeting maybe 2 months instead of 1. But yes, that we grasp the experience of, let's put it this way, this combo of trades expiring at the ending of this month. Instead of opening, let's say, one super huge trade here at the beginning of the month, waiting for the ending of the month, just to see that it was in a loss. I rather opening different trades to different zones to make test to fix and maneuver the trade to, in case a scenario like this one, mitigate losses, because that is part of money management. What's going against you? And the fact that you need to consider that using binary.com, you have of 60 trades open at one time. You can more than 60 trades open. To consider that, because even if you are using $1 trade, you can more than 60 trades. You need to close open trades in order to be able to open more. Trading with the binary.com platform, you need to factoring that into the money management technique. So opening one single trade here and 1 month to see this, I decided to open different kind of at different kind of prices, different kind of trades. Because if you remember, we talked about it that I broadcasted in my Google Plus account, by the way. Market, when I started seeing this sell-off, I decided to open a trade that either the price was going to close below the 112.50, that is this level, as you can see, or higher than the 114. So those aspects is met, so that is why this trade actually its probabilities to be closed profitably at the end of this month. It depends on the price holds below the 112.50. Money is a very complex thing. Actually, money management is not just risking 1% of your account every time. That is not money management. That is only a rule. I add that rule to the 0.5%, 0.1%, 5%, what fits your statistical data. Money management is something that is derived having a statistical data of your real trading, meaning you need at least to have 1,000 live money open, your version of your strategy, whatever it is. Having that 1,000 statistical trades analyzed, we'll start seeing some patterns arise. And after, money is taking that statistical data and adapt it into money management tech. Like, for example, this is the beginning. I open all $10 payout trades. It started down, I open $10 trades, etc. Payout trades. That is not the same as $10 stake trades. You need to know that, because there are trades that, because of the condition, are more probable than others, and if you choose a payout, the stake that you're going to pay is high and the reward is going to be low. To stake instead of payout, then you're paying way more for a trade that is safer, but you receive more profit. So you have to check all those aspects in your money management. So after having, let's imagine that you have a strategy that you feel comfortable with and doing live trades. And you have one trades and you need to do them this way. All the trades at the same payout. At least 1,000 live trades. What is that the ending result of strategy should be like break even. More 50, 60, 45% of success rate. That's more or less what you expect. If you're above 80%, 90%, well, you're a super genius trader. But all traders are between the 45, 55, 60% of success rate. What makes the difference in management? On that way, in a very complex one. For example, analyzing your statistical data. If you realize that, for example, during the last 1,000 trades, let's imagine that is 1 year of trading. If I went long on dollar yen, I lost 80% of the times. And you realize that in your statistical data. What's the million thing that you can do? You avoid longing dollar yen. Because for a reason your strategy is not working longing dollar yen. So tuning that is actually making money management. Your statistical hard data that at the end more or less 50% of success rate. And what to do is to start getting rid of the things that are precisely finishing your success rate. That could rise after analyzing the statistical data. You can, for example, see, okay, during my last year, my 1,000 live trades, never had more than 30 trades, losing trades in a streak in a row. You can bring that into your money management. Because it's a strong resistance to do martingale in your options, but actually it's a very useful tool. But a dangerous one if you don't know what you're doing. Because martingale a trade is not about just pulling up the state of what you are having a problem with a trade that you're having problems with. No, that is not martingale. Martingaling is, for example, instead of what I did because of this purposes, where it got the higher the stake I took. No, I didn't do that. I should have been doing that. But have lost sense if so you see a trade, okay, you open here 10 word trades. Then when you got here, you started opening $100 trades. That is like you are taking the risk. According to you can do that or not. But that is stressing. You need to have a statistical data. It's not a fast money making thing. Free thing. Actually, you need to lose money in order to that is the hardest thing that people are not just willing to accept. Because after losing live trades, you experience to stop losing live trades. You can win demo trades, use demo trades, but it's a complete different psychological aspect to lose and win real money. It's a complete different thing. It switches and changes everything. When you go data, I know that I could have increased the stake where it started getting. We have a difficult thing. The market is breaking this daily trend line, but I mean what it's doing here is finding very good buying opportunities because the whole thing is not changing. So we that eventually, maybe not by Friday, it should be like more or less here or even close to the 120. Of course, that would take 9 months or something, but that is my idea. And all these combo trades were designed exactly to expire at the end of this month. So I honor that and I just open trades with that expiration date because and at the same pay time. Next times I will be making variations of the payouts, duration of the combo to know the reasoning behind. This statistically you will be able after having enough experience in the markets, owning enough losing trades in the markets, because in the reality, it's not made by winning everything. A trader is made when the trader loses money. It's only when you develop the skills of taking care of your losses that you have chances to succeed in this arena. If you're a profitable trader with losing no trade or no trades in demo accounts, well, see you in live account. It changes everything. The stress that you feel when you lose money, real money, and the thrill that you feel when you win real money, distort everything. It is your mind, the way you understand the markets. It's like putting you in front dirty glasses. You will start in everything you see. You will start understanding it very differently. So again, my objective for the trades that will expire in some days. The low started getting overall below this price, where I started opening. Pay and see if price is above the 109.50 this month. This year, and I started opening several trades here. Why? Because with support of this support, this is for me, it's overextending, but it's a support zone. We have a psychological level here. So it should be good enough to, if I am right in my fundamental view, to be touched. And apparently everything is pointing to that way. So those trades were according to the configuration just to mitigate the losses that maybe this overall combo will throw. But if I have changed else, I think the lot actually turn a losing combo of trades into a one. Actually is something that tweaks and switches the final result of something in the other hand. If you have money management, you can turn a winning trade into a super losing one. So you use a statistical data of your own system. Because I can tell you, for example, myself, in theory, when I find this scenarios, I start doubling the trades. For example, open 10 here, 20 here, 40 here, 80 here. And I know that the price is so reliable, the 109.50, I'm willing to risk because of my view. But of course, accounts should support that. All the combo of trades that you open, every trade is in a loss. That should be more than 3% of your overall account. So it's super difficult. It's a difficult skill because it depends on objective and subjective things. It was not difficult enough. You need to do money management based on those two aspects. So if you develop a money management based on an aspect, trading aspect, that is known, that all your money management will be wrong. And even if you have the subjective and objective skills developed, the money thing will take time to crystallize into something that works for you. Why you need to take it calmly, and with it is very controversial, something that I say, and I try not to say that because it's very controversial, but I'm going to say it now. The thing that could happen to a trader that is beginning is to have winning. It's the worst thing, because when you start winning in this, you reach the dimension of how complex this could get at some and will get at some point. And that's where frustration starts happening. Because managing when you lose trades, how you manage that, what will have the effect of succeeding or not in the trading world. It is clearer. Even that on every single individual, to turn out all the trades that I open in this combo, it's solely in the money management if the combo of trades will end up being in a complete losing, in a even, or if in a way. In the money, only in the money management. Not prepared to accurately, you turn, instead of turning a lose to a break even, that is my goal for WoW, you can just break even trade into a losing one. You need to take it easy, carefully, and you start doing your first steps in demo. When you start, you feel comfortable with it, even if that won't work at the end, but you feel comfortable with, you have some kind of statistical data in demo, you try to do some management thing, then you go live and then you experiment. You have, okay, I'm not going to lose, let's say, more than something. Lose it. It will take time, at times years, that skill. It's like for tuition. Nothing more than that. Markets are something that actually you cannot learn in a school. We're not school for traders. You acquire tools. Being a good trader is something that you can learn. It's like, believe you can go to a school to be a good football player. They teach you good tools, but that won't make you a good football player. Your effort and how you are to bend reality, imagination, and make something out that again will end up working for you. It's trying to be a pioneer. You really don't know the exact shape of what you're looking for. Maybe you are starting looking for something and you end up finding something else that works. But it's that spirit. But you do have objective data to compare. First, you start on demo, go live, but expect that you will skip the losses. Losses are part of learning. The true diamonds of trading real life. Because if you decide so, I make a responsible management thing, even if you lose your account. But the only way to make those losses worse is to learn from them. And the only way to learn from them is to have data that you can analyze and to try to improve it. Because start betting randomly, saying, okay, this is getting lower, so this here I bet 100, and here I bet 500, and here I bet 1,000. It goes negative. You will have reliable data because all the trades that you open were based on a gambling, on a casino logic, uh, thinking. No, you open a trade, you need to be able, even if it is in a loss at the end, able to show your wife, to your partner, to your family, to your whatever, and feel proud of the loss because it has all the elements to open a trade. But this, I did that, for example, when I started opening really heavily trades, well, not necessarily when this started moving down, but when it started being here. Why of this breakout? That posing this is a fake breakout. We have a psychological here, and we have the 10950 as the ultimate to be respected. So I started getting here. I started opening more and more trades, keeping $10 thing, but just maybe mitigate the losses of all the combos. So that maybe this should mitigate 75% of the losses. So that management, that is real trading. Trading is not winning every time. Real trading is not dream of aim that you will open, you will double up your account. No, that is not real trading. You can be lucky at times and do it, but real trading is this: is a responsible, realistic analysis. For example, here, my error was that this shouldn't have taken place in the first place. My idea is that by this month the price should be like in here. Since the only reason I didn't close the losing trades is because fundamentally this is still to the upside in my view. Yeah, maybe we could have a wild movement to the upside, for example, the one we have here. But it's bullish. We are doing this for me, this is a fake breakout, and we have the support of the psychological. So I am still bullish. My outlook hasn't changed. Maybe my entry prices were not correctly, and my timing was not correct. I have time to compensate that, opening at very low trades, very low prices, some trades to mitigate all the sequence of trades that ended up being wrong. That's trading. In the conclusion of this webinar, this cool thing that I say that it opened bigger trades, all the latest ones, I could have turned flow of trades probably true, but have been pushing the combo of trades to acceptable risk. Trade about that also, getting too greedy. Because okay, I was wrong during the last 2 weeks of my combo, and I really want to overcome that in 1 week, put it completely in profit. Just super loaded trades at the bottom of this is not precisely. It is like it have looked like okay, it's like a casino thing, and price continue going lower. You doubled your losses. The key word of the game is losses, not winning. your emotions all with losses. If you master your emotions after losing money, then you're able to really make money management thing technique that actually look for your losses and them in check. Yes, this combo of trades maybe will be closed in some losses. That is okay. That the example of the first time this the trade were starting going against myself was starting having casino opening trades higher and higher for the right time to start entering with logic into 10. I mean, in the thing, maybe I would have some variations in that, but not too much. Maybe instead, maybe 15 or 12 or something, not 100 and 1,000. Statistical risk, all demo trading. So when a combo of trade is going against you, how you can manage it? Because statistical data is showing you that you have, for if your statistical data shows that 80% of your trades wrong, there is no possible money management that will help you with that. Maybe be more or less a 50-50, and then money management will start kicking in, make a difference. But at this time, and this requires losses. Only under the fire of trades, your temper will be formed, and you know how to react exactly when a trade against you. Example: if I panicked, seeing price just coming from the imagine the yen was about to hit the 116 and 110. If you master your emotions and you start seeing that, you can slowly committing mistakes. So when you're in of knowing how to deal with your emotions when you start losing, and you have a statistical data of your emotions, more how your statistical data should look like, you can start adjusting the volumes of each trade. And you are checking back if that is aligned to the final results with your statistics and etc. So it's a continuity of active surveillance. The statistical data fits your current data, and so you can start having an idea if your system is failing or not. So maybe this is like I really don't know if this kind of things is popular to say, but I feel it's my responsibility as a trader just to share this, because there are of resources in the internet that they're eager to make you believe that this is quick, that this is fast, that you will make money fast, and it's a lie. That is not true. And if I say a lie, that is the truth. So I try to be very straightforward with you. I'd share you what really like, so you more or less an idea if you really dedicate this and you base of making being disciplined, continue your objective of developing the skills that you need to succeed in this activity, etc. At the end, more or less how this should look like. For example, this: if you have a management, have a statistical data with 50% success rate, most part of people say that is not that I couldn't make that work. The internet, you see 80% of success, 95% of success rate. So you go misled by marketeers. They see that, and you know that your data is 50%. You trade, and it's the complete opposite. It will take you a lot of work to get to the 50% success rate. It really takes your time. There is what management will do the difference. you the same effort and time to develop it because it's complex. It has emotional elements inside. And you so what we're going to do next week, and then review the final results of this trade. I didn't show it to you. We have like already 5 closed trades in this dollar yen. 3 of them were closed in profit. 2 of them, I believe, are closed already in losses. We have trades open. We are going to review next week the final result of this combo to have lessons on that. And I'm going to start reviewing and tell you this, so maybe you could take your time and check your charts beforehand before the next webinar. Euro yen, yen, dollar and peso, and gold. We'll for the assets next week. The next combo of trades, because 4 are the ones that will be very interesting during the next month. So may have having your ideas on that. We're going to check you're standing on next week to share you if I find some opportunities and to give you something to think about. So remember that you will receive a recording of this webinar next course. So feel free to subscribe to my social media, you will. Remember that I expect you next week at the time in the same place. This is Alberto Alvarado. See you next time. Bye-bye.